on, everyone? Welcome to the Stock Market Morning Prep video for Monday, March the 10th. Mixed trading on Friday. Dow Jones up 30, Nasdaq down 15, almost 16 points. S&P up a buck, and the Russell down a buck. So markets are digesting what is the next move going to happen. Basically, from that Thursday reversal, we had made new highs, intraday highs at 1887.5 in the ES. We are at major extensions. We are frothy here. We've been up 22 out of 24 days, I believe, maybe a little bit more or less, but that is clearly just up straight up in a row here, and it is definitely time to be cautious here. Have to be a cautious bull right now. Obviously, the markets are making higher highs and higher lows, but you have to understand that the markets can reverse at any given time. Risk off comes real fast, guys. Also saw a little did a little research on the internet over the weekend, and I saw that retail investors are now buying stocks on margin, the highest since 2000 and I believe 10. So don't quote me on it, but if you have a lot of margin buying and the markets start to reverse for whatever reason, you have to be careful, because that usually starts the fire here. And then we start to explode to the downside. So anyway, have to be cautious, but yet I wouldn't be loading up on the long side, wouldn't be looking to short at the moment. I get a lot of emails, well, what do you think about getting short here? No, because the market has not told us to get short. We continue to make higher highs and higher lows, and we have little shallow pullbacks, and it's getting bid up again. You know, case in point, we just saw this morning in the pre-market session. So no indicators today. It's basically a hurry up and wait, guys. I understand that. I know it's boring, but patience here is needed, and you need a lot of patience to be a trader. That's for sure. So just remember, dial it down, back off a little bit, trade the best setups. You don't find it, so be it. Wait for the next day, and just get ready for your trading day for the next day. But again, there'll be plenty of opportunity, like there have been so far. We had some decent days, in between some consolidation days. And that's really what the market does, right? Market moves up and then consolidates, then moves up again, consolidates and or down, but then it consolidates and then makes a move again. So we have a little bit of a pickup in volatility. Things are starting to come in a little bit more perspective of really what's happening here. I think everybody is waiting to see, what is the next step. So we had non-farm payrolls that came out. They rallied them, and then they sold them off on Friday again. So as you can see here, now we're just really being patient. I'm going to go right into the charts. The weekly charts, I'm not going to show you, only that it continues to look very good, making higher highs and higher lows on the weekly, still in this uptrend channel. Now when we break that channel, that's another story, and then we would reevaluate. But right now things are looking pretty good on the longer term time frame. Here is the Japanese yen, as you know, inversely correlated to what US equities are doing. Right now we're breaking down here, so we're up only a penny, but we're breaking down here, so we're making lower lows and lower highs. This is actually very good for stocks. If you think stocks can't go up, think again. Remember, guys, this market is totally crazy, and I would definitely expect the unexpected. So anyway, when we see here the yen breaking down, that bodes well for stocks. And if we would need this yen to get back above this trend line and then start to really get back above here to make any type of difference. Don't forget, we have this confluence area of resistance. We have a cluster of Fibonacci extensions and retracements. So this here held, as you can see, and then now we're starting to break down again. So take it one step at a time, but that is a good sign for equities. Let me just get this out of the way for you guys. Okay, now here's the daily chart. Now I did a Fibonacci retracement from high to low. We had 1272 extension. We hit that 1878. We actually pierced it, came back in again, and now we are down here. As you can see, $1.75. Remember, we were down almost four and a half handles early in the morning session, and then the Europeans bid them right up again. So again, there's a lot of buying in here, and a lot of money that's being put to work by the retail guy. So we need to really use caution. But again, long as the market continues to do what it does, you can't be fading this market at the moment. Otherwise, really, you could do some damage to your trading account. Okay, so now we got the high that was made, and now we sold off a little bit, and then here again on Friday, and now we're just waiting for it. As you can see here, the market's strong. As you have the stochastics and RSI above 70, and the stochastics, above 80. So quite constructive. But again, we hit this target. Remember, look at this, 22 out of 24 days straight up, guys. All right. Remember, use caution here. I'm doing the same by just being nimble. And if the catches a position, I don't see anything, wait for the next day to develop. Okay. Here's the hourly chart. As you can see here, 1838. We held. We ran right up again. We popped higher, and then we failed. Now, let's see if this makes a lower high today. If we make a lower high today and take out this low, this is the low we want to be watching, right? Let's just put a little trend line. This is in the ES. We want to take this low here, coming in at 1867.50 is going to be an important low. I'll take that as a local low. If we break that and close below that, then I think you might get started at least a retest of the 1838. I know how crazy it is, but at least a retest of the 1838. Then we would reevaluate it again. Here's the overlays that we have. We have the spiders, the GLD, and the TLT. And as you can see here, guys, the TLT is still holding well, even though we did get a few days of selling in the TLT, and also gold is actually holding up well. This is what I don't like here. If markets are running higher equities, we should be moving much lower in gold and TLT, and they have not. Remember, the bond market is smarter than the equity markets by far. All right, if it's a precursor of what's to come, look at the bonds and you'll see. Now, if bonds do start to break down hard, money will rotate into equities. So, and then we'll put another bid into equities, and we'll probably see new highs again. Here is the spiders. You can see, I mean, literally right up. I mean, the markets are tired. There's no two ways about it. You could definitely see it in the price action during the day. But again, guys, you know, we're at lofty levels here. We do have a little bit more room to run at the 190 area. That's the upper trend line of this channel. But I would definitely use a little caution here. And, you know, a lot of these stocks are up, you know, 2-3 times. It's absolutely crazy. And nobody really cares that the valuations are so extreme. Again, as long as the Fed continues to pump money into this market, I don't, and their statement is status quo from their last meeting. There's no reason not to buy equities except valuation play. I mean, like to see these things come in again. All right, Doji on the transports, our leader here. As you can see, we broke out. We had the Bollinger Bands tighten, and then we just literally are at our outside of the band here. So let's see if we can get a little more room. But again, target again is going to be 140. I mean, right up in here. So that doesn't mean that we can't get in there, and we can't test this. Russell, our secondary leader, just consolidating for the last 2 or 3 days. That bodes well here. This is also very bullish. So remember, you take a pop up here. This also target measures up to 122. So it is bullish, although it's just consolidating for the last 2 days. It is quite bullish, guys. Here's the Qs doing the same thing here, kind of bullish. And diamonds starting to break higher again, as you can see. Let me just move this over. There we go. All right, so diamonds are starting to kind of catch up here. But again, it did not make new highs, where other ones made new highs and intraday highs. This did not. So obviously, we have a little bit room to run and see if we can start breaking that too as well. But as you can see, the Dow Jones is definitely one of our laggards. So it will lag the other three leaders. GLD just kind of back testing that 200-day moving average, holding well here. It's been holding above the 200 for quite some time. If it starts to break down, then we will look for a trade. Right now, I have no trade in GLD. I have no trade in the USO. I do like some of the oil stocks, not crude in itself. I'd like to see a little bit more chopping around, backing and filling, and then start to create some sort of a base, something like this or like this, before we start to buy within. You're right in the middle of the range here. Either we come down low, or we break higher and then back test it. But right now, no trade in the USO. These are one of the sectors. Let's go right into the sector charts. OIH, I like the OIH, which would be the Schlumberger, the SLB, the Baker Hughes, BHI, and the Halliburton, the HAL. Here's the Schlumberger, as you can see here. Again, most of these stocks you'll see need to pull in now. So no trade in them yet, but they're holding up very well. Here's the oil and gas ETF. Valero's my favorite, as you can see here. So what I'd like to see now is pullbacks in all of these sectors that I'm showing you, so we can get an opportunity to get in. Here's the XLE. This is a mixed bag with the oil and gas and the oil services. So XLE has a little bit of everything, you know, refiners, but this actually is doing really well. As you can see, we had that big bearish rising wedge we broke down. If you took the quick short, and then I like to do I like to get a back test, and we never got the back test right, never failed. So to me, this would have been no trading, but you could have still taken it, obviously, if you were quick enough. I like to get the breakdown, a back test, and then fail, and obviously that did not happen. So that's why I had mentioned a few weeks back. I said I'd rather be a buyer in the XLE than be a short seller. All right, now another one of my favorites, alternative energy, as you know, is solars. I've been talking about this since December. Really starting to catch a bid here, guys. I mean, really doing well. Here is a nice little area of support. I love to see now TAN start to come in a little bit. Some of these stocks are doing really well. YGE, clearly a confirmation on a breakout. Maybe we get a little bit of weakness in the coming days. If we can get some market weakness here, that would really be healthy for the markets in itself. And some of these stocks that we looked at. But YGE, keep an eye on YGE. Love for solar here. Actually pulled back a little bit. Going to give us another buying opportunity. A little choppy. This was basically on earnings. Let's see if it get back to the 50 and kind of base a little bit. I'd like to buy for solar back again to see where that goes. Now, Trina Solar, TSL, fantastic, really breaking out here. It looks very similar to YGE. And just, you see how they base, when they base like here and you get this for 5-6 trading days, even go into 2 weeks, and then we get these Bollinger Bands starting to tighten. That's when you want to start looking at it. And when you get that breakout right here, that's perfect with extra volume. As you can see, volume confirms the breakout. Love the TSL. Okay, those are the three I really like. Here's home construction. Just what we're doing now is basically just bull flagging. I'd like to see this come in just a little bit more, maybe back to that 50, and then kind of dial it down and see what's happening in that ETF. As you can see, here's the Home Builders XHB. And then some of the home builds, as we all know, I'm looking at Lennar. Now, Lennar get downgraded, but this is good. This is what we want. We want to get to this 50 here. I'm going to be a little more patient since the markets are at extreme levels here. I'm not looking to start adding to a position or taking on any new positions until this market corrects. I just can't see myself, carrying positions overnight with these markets are frothy at these lofty levels here. Next thing you know, you come into a market in the opening and the market's down 30 handles. Here is PHM. Again, nice pullback, looking good. I like to see that to the 50-day. KBH actually is at the 50-day already. So, again, look at this base, guys. This is a good base building stock. And this is something that you can actually start buying into and then kind of holding it, sort of like a longer term. XLF, banks really caught a bid the last few days, as you can see. Now here, kind of extended, made new all-time highs as well. And let's take a look at some of the bank stocks here. Here's Citibank. Now Citibank actually did make new highs and then started to fail again. So if the markets do start to retrace, okay, and I say if it does and when it does, we will definitely see banks start to pull in. So that's why I like that the banks actually made new highs. Here's a Doji and J.P. Morgan, intraday highs. Off the base building here. Love Goldman here, needs to pull back though. As you can see, by the Gravestone Doji, we have a regular Doji. This thing needs to come back in here again. And then if we make a higher low from this previous low, easy to manage. I think you're going to challenge the highs here. But again, let's see what the market does here, guys. It's very, very extended. Not that it can't go higher. It's just probability, risk, reward. It's just not there anymore. The markets are fairly valued already, so you're not really getting any type of discount. Now it's all euphoria of buying and buying and buying, where the retail crowd is continually coming in. And if you're a contrarian, that's going to major sell signal. So just be cautious, be on your toes. Obviously, day trading would be the best. Trade the best setups at the moment, and let this market start to at least come in. Let someone hit the button and take some profits here, and then once we take some profits, then it's obviously better to buy at lower levels than when we are up here at these extended levels. Okay, use caution out there, guys. This week should be interesting. That's for sure. Have a great day, and we'll speak to you tomorrow.